specifically how the environment you trade in can make or break you, your plan, all of it. Okay? My name's Nick. My goal here is to help struggling traders find consistency and profitability. So we have to remember that when we make strategies, okay, when we're building strategies, taking somebody else's, whatever, it's built around certain criteria. So when I say this, what I mean is that we focus on certain rules or parameters based upon how we create a strategy. Okay? Typically, there's really just two. You have trending, mean reversion. Hopefully that's how you spell that. Looks a little weird, but so why are we talking about the environment? Well, if you're building a trending strategy, a strategy that's around price trending, well, you want to be trading when price is trending. And the opposite for mean reversion. Okay, you're looking for more extended, price being more extended, and looking for it to come back to a like an equilibrium, or kind of correcting, having a correction. So this was huge for me when I really started thinking about it in this way. Like, we create a strategy, okay, it's trending, right? I'm buying pullbacks. Let's just pretend all I do is buy pullbacks, okay? It's the only thing I do. Trending, buying pullbacks. I didn't even make this enough. What am I doing? I probably have, okay. So this is my whole strategy, just simply buying pullbacks. If I get into an area of price here, okay, where we are around this, go up a little bit. Hold on, let me find, here we go. We can ignore this. Okay, I have a trending strategy here. I'm buying pullbacks. If I am trading in this area here, this probably will work very well, okay? It looks like, we're on the 1 hour chart, right? So if you remember, or if you didn't really know or think about it, each candle can almost represent a lower time frame structure, okay? Now, it's not going to be perfect because we all read structure a little bit differently. But if you were to zoom in on one of these candles here and go back to the 1 minute, 5 minute chart, you might be able to find it represents structure, okay? So just looking at this, if we were to imagine we're on the lower time frame, like here, this to me looks like, up, a little bit of pullback or rejection, and a continuation, right? This is what you're looking for in trending. We're moving up, we're coming back, heading to an area where price will reject, or we hope it will reject, and we continue, okay? So again, price move pushes up. Now when we're looking at candles, let's explain this real quick if you didn't know. If you have a bullish candle, typically you have the open, okay? That's where we open, right? The low, the high, the close, okay? Candles typically, not always, okay? Typically they move like this. Bearish candles are just the opposite, okay? Bearish, you'll have the open, the high, the low, the close, okay? Now obviously this doesn't always happen, but very often it's how candles look. So when you look at candle charts here, so I don't have to zoom down into lower time frames, you could say this candle here, close here, this is bearish candle, so most likely it came higher, lower, close, okay? So for this example's sake, we pressed up, came back down into an area that you would define however you want to define. I'm not saying just do this, okay? Example sake. So in this area, a trending strategy is working great, okay? Now, if we're taking our trending strategy into this area, it might not be so great, okay? It's a little more choppy. We don't really have a specific direction. Alright, now there's things that can work, and the lower time frame, makes a difference for the example's sake. This is why the environment is such a big deal. So if I'm coming into trading on a certain day, and I know I trade a trending strategy, and I come in and price, I'm looking at this right here, right? So this is all I'm looking at. I'm like, you know what? This doesn't look good. Okay? I don't think I'm going to trade my trending strategy within this area. Okay? And then maybe we say, okay, we wait for it to break out and see what happens. Okay? This is why when I really started trying to, look at this, where environment really is crucial for how your plan will perform. Because obviously we can all just sit down at the charts, and my strategy is trading pullback, so it's like, boom, here's an entry, and boom, entry, right? And we can sit here and just do this. Okay, wow, great. All right, and then we get into this here. Okay, ooh, entry, maybe a loss. Ooh, entry, maybe a loss. No, didn't copy. Hold on. Loss, 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 loss. And then you're taking on these losses, right? After these wins, right? So you get 4 winners and then 4 losers. Okay. Now this can work. Okay, depending on how you're managing your risk. You can go 4 and 4 and make a profit. Okay, it really depends on how you're managing your risk. All right. But the idea is, I'm truly worried about risk management. It's more than just risk reward. Okay, and I'll go more in depth into that, because that's also another video I'm going to make in this playlist. But just thinking about where does my strategy work best, and then attempting to identify that environment and trading that. Okay, obviously we're not going to notice what price is going to do in the future. But if you can establish, okay, currently seems like price is more of a trending environment. Remember, we're talking trending, creating higher highs, higher lows, higher highs. Oops, or the opposite, lower low, lower high, lower low. Okay, that's what we're doing. So if price seems to be making those, then yeah, trade that environment. If price seems to kind of just be stuck somewhere, maybe don't trade it yet. Okay, so like if I showed up in this day here, if I'm trending strategy, I don't know if I'm going to trade within here. Now if I show up, same here. If I'm showing up over here, don't know if I'm trading over here. Okay, if I'm trading trend-based strategies. Okay, because obviously you want to be riding the trend as you trade trending. Okay, so again, this area here, if this is what we're looking at, this could be pretty good for trending. And again, your strategy is going to have rules and parameters and whatnot. Okay, it's going to, you'll make that. But if you identify these areas that seem to be more trendy, this is the area you're going to want to trade in. Okay, there's different ways of identifying this. You can use market structure, which I have a video on. You can use, there's different indicators you can use. You can use EMA if you want, and pretty much just say, look, whenever price is above or below, that's how I'll use it, as trending. When I use EMAs more as just a kind of like a visual tool, nothing really specific, but it can help give you an idea about kind of the way price is moving. So if we see price, say, below or above, or consistently, price is more so trending in those areas, and if the EMA kind of is like moving around sideways, it means we're a little bit more choppy. Okay. Obviously here, this is a nice move, a very nice trending move. This is a good example. Okay, so here we see, look at this nice big old trending move. Hold on, I gotta move this thing. I did this last time too. Alright. Okay, we're trending, right? We're trending nicely, right? The overall big push to the downside. We started the sell channel, boom, big aggressive push. Okay, so if we caught a pullback in here, up here, this is perfect. And you can see that the EMA kind of resembles this, where price is steadily rolling on below. Okay? This area though see price is a little more choppy, up and down, doesn't have a true direction. We're moving sideways, and the EMA itself is kind of just cutting through price. Okay, that could be a way to establish. All right, there's a lot of ways to establish direction. I'm going to make a video on directional bias. Again, those are just a couple options. So just remember, however you build your plan, is trending over to mean reversion. Mean reversion, these big pushes is what you'd be looking for, okay? Because you're looking for the market to find a correction. Now, how you enter here, that's up to you. You could look for previous key levels where you think price will return to. Maybe something like a supply and demand kind of thing. I don't know, you know. There's a lot of options here. You could just decide that if you see a simple pullback, you'll be like, okay, one candle, boom, we're going to turn around, price above previous high somewhere here, however, and we're going to target down, you know. After price seems to be extended, you can do Fibonacci's, you can do Fibonacci extensions. That'll be more for specifics, okay? But the idea is that if I'm trading, my strategy is built for consolidation. I'm not going to trade when price is doing this, okay? If I'm a trending strategy, sure, let's see if we can find some pullbacks in here. Mean reversion, sure, I can trade this. But you're not buying here, right? Obviously, you'd be selling because the strong aggressive push is bullish, okay? So really trying to identify what price is doing, what your strategy does best, where it performs best, because these strategies have pros and cons, right? So figure out what the pros are, when it works its best, and then figure out the cons, like when it has issues, when it doesn't work as good. And then really try to identify those environments and only trade in those environments. Okay? Hopefully this made sense to y'all. Hopefully it clicked when I first started really thinking like this. It really made a big difference in my trading. So hopefully it helps some of y'all. All right.